Miss Garrett was going to be here.
Hi,
So
Courtney.
I'm
It's
so
great to
excited
have you on
to
here.
be sharing with you guys today. And, I'm just going to get started. And I want you to know that first and foremost, I'm going to throw a lot at you today. So I don't expect you to understand everything I'm saying. I just want you to know that it's possible and there's lots of things that we can do along the way to help you. So, um, the name of my company is OTB Tax. I'm Courtney Epps. And for those of you that don't know me, I have 6 children and they are 18, 17, 16, 15, 13, and 7. So lots of children. And then I'm an author, I'm an international speaker. I've written 2 books, and I live in Greenville, South Carolina. And I'm a wife, obviously, and I like to tell people that I'm a motivational tax strategist, meaning that I use my crazy stories and help you save money in taxes along the way. And I love to talk. I'm a serial talker. And so, just to share with you kind of why I fell in love with the network marketing space and what you guys are doing is that I heard some statistics by Grant Cardone a couple years ago, and I was actually involved in network marketing and for about 3.5 years. And at the time, I'd been out of network marketing, really focusing on my accounting practice. And Grant said these statistics, and it hit me really hard. And it said that the average household income in America was making $60,000 a year. So I went and looked that up, and that was true. They're paying $14,000 in taxes, and the take home was $46,000. So that means, here's the problem, is the cost of living in America on average is $53,000 a year. So the average American family household is going to debt $7,000 a year to work, 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation. And because I've been in network marketing, the crazy thing is I had done over 900 tax returns while I was in the industry, and to share with people how I could free up money for them. And I found that I could save between $4,000 and $8,000 a year for the average family. And so when those two collided, I realized that I was put on this earth to start sharing with people how they could free up money by having some sort of home-based business. And so you first have to understand that there are 2 tax systems in our country. So why is it that home-based business is so beneficial? The 2 tax systems are, most people think one's for the rich and one's for the poor. So actually, one is for the W-2 employee, and that was created to steal wealth away. And the second was created, that's the business owner tax system, and it was created to provide wealth for us. And I'll explain why. So business owners, we go out every single day and we're boosting the economy. We're generating sales. We're spending money back into our business every day. And then the hopes is that we'll one day hire employees, and then the employees will end up paying the taxes. And so employees will always pay the lion's share of taxes. And I don't know if you realize this, but employees on average will pay more in taxes in their lifetime than food, clothing, housing, and transportation combined. And that's why I believe that you truly would be brain dead not to own some sort of business. And why I think the home-based business industry, and I'll share that with you in a little bit, why I think the home-based business industry is so beneficial, even if you do have a business, is because there's even bigger tax deductions that you can take advantage of. So what I do on a daily basis is I work alongside and help speakers, coaches, trainers, and network marketers. I help them attract more people into the industry. I help them keep people in long enough to win, and I help them keep more of their hard-earned money. And now here's why it's important that we share this with everyone. 46% of Americans before the pandemic did not have an extra $400 to their name. And 69% of Americans didn't have an extra $1,000 to their name. And this was me. So when I signed up for my first network marketing business, I did not have the money. My parents actually paid for me to join that company. And I ended up making it to the top 1%. The second company I ended up going into, it was $421 to get started, and I had it was $421, and I had $428 in my bank account. And I was a mom of 6. My husband was a stay-at-home dad, and at the end of the day, I knew as an entrepreneur that I had to make it work because I didn't have any other option. And most people today, if they see what, it cost me a couple $100 to get started, if they don't have an extra $400 to their name, it becomes crucial for us to teach them how they can free up that money. And that's exactly what I'm going to show you in just a second. So why do you be brain dead not own a business? Now, here is the first step. You have to understand what is a tax deduction. So a tax deduction per the IRS, is anything that allows you to produce income either today or in the future and is reasonable. So, is it reasonable to think that I'm a platinum partner with Tony Robbins and I spend $85,000 a year to be that? Yes, for me it is because I'm growing my business. So, anything that you believe that is actually allowing you to attempt to earn an income, that is very beneficial. And as long as you believe that and you can show, hey, this is why I'm doing this, then at the end of the day, that becomes tax deductible. And I want you to know, first and foremost, that the burden of proof is on the actual auditor. If you were to ever get audited, the burden of proof is on the auditor to prove that it's not a tax deduction. Because truly, anything and everything can be a tax deduction if you play it the right way. So, I want to show this to you, and I actually made some changes because it seems so astronomical for people to believe that they're going in debt $7,000 a year. But if you go look it up on the usdebtclock.org, you'll see that the average American citizen, every man, woman, and child, is in debt around $80,000 right now. So I put the single person, a married person, here's their income. They have a standard deduction. Obviously, everybody can take a standard deduction or an itemized deduction. You have taxable income, you have taxes. Here's the take home, the cost of living, and I lowered the cost of living on this. So I took it from 53 to 50 if you're single, and here's what happens. You're in debt. So this is what's happening in the average household in America. So we have to be able to fix that problem, and here's the great thing is that as when you move from being a W-2 employee to a home-based business owner or a W-2 employee with a home-based business, now you get to take tax advantages that you didn't have yesterday. But they're expenses that you were already paying for. So it allows you to redirect your living expenses and turn those into business expenses as long as you're doing what is considered daily business building activities. So this is the breakdown, and this is what the IRS says is, completely legitimate, is that any expenses incurred for the purpose of gaining or producing income is incurred with a reasonable expectation of resulting in future business or is reasonable under circumstances. So just like I explained, if you're intending to earn income today or in the future, and it's reasonable, it's tax deductible. So redirecting your living expenses is a huge deal. And I want you to understand that, and you'll see this right away. So as a W-2 employee, we all have, everybody in this country has itemized deductions, and most people believe that they're getting massive benefit from itemized deductions. In essence, 96% of Americans are not able to claim an itemized deduction. The reason why is because medical bills and medical insurance, you have to go above 7.5% of your AGI in order to get any benefit from medical bills or medical insurance. So if you're making $100,000 a year, you'd have to go above $7,500 in medical bills and insurance in order to get $1 in any sort of benefit. Then you've got property taxes, real estate taxes, sales tax, income tax. That's all capped at $10,000. So that's very minimal that you get there. And then you've got mortgage interest and charitable contributions. If you go above the $24,000 if you're married and $12,000 if you're single, you get this benefit. But 96% of Americans, again, get no benefit. Then we have living expenses. So things like meals and auto expenses, cell phone, travel, internet, home office. We got daycare, and some of you say, well, yes, I get to add back my daycare. You may, but you only get about $1,500 a year. And I know most people are spending much more than that on daycare. So here's what happens. It's really cool when you understand the game of taxes. So when you go from being a W-2 employee alone to a W-2 employee with a home-based business or just a home-based business, you now can actually add your medical bills as business expenses. Now, what I'm showing you here in this middle column is not minimums or maximums that you can claim. It's actually the averages that I see on a daily basis. So medical bills, here's how you can add those back. You can hire your spouse can in turn pay 100% of the medical bills. You can then reimburse him, and that's called a fringe benefit. So that's 100% tax deductible for your business. So that's a way to get back all of these medical bills that you lost. Your medical insurance, as long as it's not through your employer, you can actually claim 100% of your medical insurance through your business as a business expense, whether you're a W-2 employee or not. And if you are, in fact, a W-2 employee and you have your medical insurance through your employer, you can actually pay your premium through the fringe benefit called an HRA. So there's ways to get that back as well. Now, things like property taxes. So I'll give you, for instance, I just bought a toy hauler, and the purpose and the intent of buying that toy hauler was for me to travel all over the country and to have a place that I could actually do speaking engagements from my party deck on the toy hauler. Now, my 6 children are going along with me, and we're going to be staying in that toy hauler, traveling around the country, seeing clients. But my intent was to build my business. And because of that, now everything associated with that toy hauler, it becomes a tax deduction, including property taxes. Now, and we'll talk a little bit more about that later, but even the truck that we had to buy in order to pull the toy hauler, that ended up literally saving us about $60,000 this year in taxes. Now, business use of home, huge deduction. For those of you that have been told that you can actually be audited for business use of your home, I will assure you that in 19 years of me preparing tax returns, I've never had one client audited that even claimed business use of home. And I've only ever had one client audited, and that was a hairdresser. And we ended up winning that audit. So business use of home is things like property taxes, insurance, your utilities on your home. You can write off mortgage interest. So it's based on a percentage of your home. And one of the things that most people do not know is you can actually back out hallways and closets to make your home percentage even higher, so you can get a bigger deduction. And so I typically see between $3,000 and $5,000 a year. Charitable contributions, we're going to talk about that in just a second. There's actually a way to give from a gross income level to force your charitable contributions to be 100% tax deductible. And giving truly changes everything. So, one of the things I tell people is like, so I pick up the phone and I call Jessica. And I just started in my home-based business. And I say, Jessica, I really love to share with you what I'm doing. How about we have lunch tomorrow? So I get in my car and I drive to Jessica. Well, here's the thing. I can write off 58 cents a mile because I drove to Jessica. Let's say it's 20 miles. Then I sit down and have a conversation with Jessica, and I tell her what I'm doing over food. And that can be before, during, or after we're eating. And I tell her all about it. Now I can write off 50% of my meal. Well, Jessica could say, you know what, Courtney, I love what you're doing, and I want to be involved. I'd love to make some extra money and get my product at wholesale. Or she may say, you know what, Courtney, I'm not interested in making any extra money, but I love your product or service and I want to buy that. Or she could say, you know what, Courtney, I think you're going straight to hell or jail, but I'm out. And so I'm going to look at Jessica and I'm going to say, Jessica, you obviously didn't understand the fact of the matter is that I'm saving $4,000 to $7,000 a year on my taxes just by having a home-based business. And the fact is I just shared this information with you, and I wanted you to be able to save money as well. But because I did, whether you join me or not, I got to write off 50% of my meal today. And I'm going to get back in my car, and I'm going to write off 58 cents a mile when I get back in my car. And then I'm going to go to my home where I get to write off a portion of that for business use of my home. And guess what? I needed my cell phone in order to call you, so I get to write off that as well. And I needed my internet in order to run the business. And so at the end of the day, the money that you're making is literally 50% money because you're paying 40 to 50% of every dollar you make in taxes. And I get to make my money. I get to buy most of my needs and my wants. And what's left over, that's what I pay taxes on. And guess what? On top of that, I get to travel around the world and I get to see the people. I get to be around the people I want to be around. And I get to get the personal growth and development that I need in order to grow my business. So while I'm doing that, I've hired my kids. And because I've hired my kids, I can actually take them with me to events. And they do things that I would get other people to do for me. But I'm also getting to spend a couple days with them on the front end and a couple days with them on the back end. And it's 100% tax deductible because they are now my employees. So I hired my kids. And then things like office supplies, laptops, computers, if you needed a camera, anything that you need in order to run your business is a tax deduction. And then things like legal and professional fees. Well, we're all paying for accountants and attorneys and things like that. And so that becomes a tax deduction as well. So I haven't even talked about anything that's extra at this point. So you see all these tax deductions add up pretty quickly. The only extra tax deductions that you will possibly have are things maybe like advertising. And when you're in the network marketing space, in the beginning, you don't necessarily need advertising. And if you grow your business the way you should, which is just word of mouth, then definitely you don't need it. Continuing education, I will tell you that first and foremost, continuing education has completely and utterly changed my life and my business. And one of the biggest reasons why I love the network marketing industry is that I would never have even known what continuing education and personal growth and development was. So the money that you're putting back in your mindset is literally going to change your life, and it's what's allowed me to skyrocket my business 30 times in the last 3 years. So dues and subscriptions would be things like your monthly dues that you have with your company, website that you would have, Zoom. Those things are tax deductible, and then cost of goods sold. And this is where I tell people, I don't know how in the world that you could possibly build a business without buying products and using those products every single day and going and telling people about them. You got to take the products in order to tell your story. Giving away the products is also a tax deduction, and then on top of that, cost of goods sold, any products that you're selling. So you can see now we have a total of $35,000 in expenses, and I haven't even gotten started. This is on like 15 different tax deductions. There's over 475 different tax deductions that you can take advantage of by being a business owner. Now here's the great part. I want you to see this. So we haven't made any money yet. Let's say we suck at network marketing. We're just getting started. We're telling a lot of people. We're just not great at it. We're not good at asking people to join. So we have the same income. We have now business expenses. And I'm not going to use the $35,000 because most people think that's too high. So it's typically, I see between $20,000 and $25,000 worth of expenses. We're going to use this number. Here's the standard deduction, itemized deduction, taxable income. Here's the taxes, the take home, the cost of living, and here's what's left over. Now you actually are in the positive. So that means the average person, single, is saving between $5,600 a year in taxes by having a home-based business and not making any extra money. And then if you're married, that's about $4,500 a year. Well, here's the thing. You have to make $3.79 an hour for 2,000 hours a year to be equivalent to the tax savings. So you'd have to get a pay raise, $3.79 an hour or $3.05 an hour if you're married, in order to be equivalent to the savings that you have from having a home-based business. And now what happens when you slip up and actually make money? So let's say you made an extra $500 a month. So now our income's gone up a little. We kept the same business expenses, and here's the great part. You don't pay money off of the income that you made from your home-based business. And the reason why is because you're still on paper showing a loss, okay? So here's our taxable income, here's our taxes, take-home cost of living, here's what's left over. You made an extra $6,000 a year, but you brought home $10,500 if you're single, $9,500 if you're married. It's almost $7 an hour for every hour that you work just by having a home-based business and attempting to earn income. Here's the thing. I had a client, and I just want to share this with you because I know that 40% of Americans lost their jobs making under $40,000 a year this past year. Huge deal. But I had a couple came to see me last year, and I had a home-based business at the time. I was running out of my house. I had 13 employees at my house, so it was kind of crazy, and 6 children and a dog and a husband. It was nuts. But here's the thing. So this couple, one made $85,000 a year. The wife made $55,000 a year, so combined they made $140,000, and they'd gotten a $35,000 pay increase, and want to know how much money that was actually going to generate for them, and how much money it was going to cost them in taxes. So we determined that the increase of $35,000 only brought them home $13,000 a year. So they were paying an additional $22,000 in taxes in order to bring home $35,000. It was crazy. So I said, while you're here, let me do some figuring for you. And I just want to see if we just did away with the $55,000 a year and kept the $85,000, what does that look like for you? And so we determined that if the wife stayed at home, didn't collect the $55,000 a year, that she was only generating $1,800 a month or $21,000 a year. They were actually, because they were being put in a higher tax bracket by both of them working, it was actually costing them $34,000 a year extra in taxes. So I told her, I said, you could stay at home, make $1,000 a month, and you would actually be better off because the thing is, you'd have $20,000 to $25,000 a year in tax deductions. That can offset all of the income that you made from your network marketing business. And from there, that money, the difference, see the loss on paper, only on paper, now gets redirected to your husband's income. It puts you guys in a lower tax bracket, and you're actually bringing home more money making $1,000 a month in a network marketing business than you were working making $55,000 a year. So that was a huge eye opener for me, guys, and it made me realize that people just don't know this information and we have to share it. So one of the things, just a couple different deductions I want to talk about. Standard deduction for auto expenses, you can do 58 cents a mile. That was typically the best way to go, but when the tax laws changed in 2018, it's actually not as good, especially if you have a newer vehicle. And so $15,000 in miles, if you have 15,000 miles at 58 cents a mile, that's about $8,700 in a deduction for you. And it's almost never a good idea under the new tax law. What is a good idea is the actual expenses, but you have to first determine what your business usage is. So your business usage is determined by business mileage divided by total mileage, and that gives you your business use. So if you had 8,000 miles on your car for business, 10,000 total, that would be 80%. And so then you would add up and track your gas, your oil changes, your repairs, your supplies, your interest, your car washes, even interest, so the interest on the car, all of that becomes a tax deduction, and you multiply that by your business use percentage. So if you had 12,000 actual expenses, 80% of that would be $9,600 a year. But wait, there's more. So you actually not only get to write off the actual expenses, but you get to depreciate the car. And so what used to take a $50,000 vehicle, if you had a BMW, it would take 18 years to write off with the old tax law. You can now write it off over 5.3 years. So the depreciation is increased 3 times. And if you have a vehicle that's over 6,000 pounds, so if you buy like a Land Rover, you buy a Tesla Model X, if you buy a Suburban, all of those are over 6,000 pounds, and they're actually 100% tax deductible in the year that you buy them, regardless of how much you pay for your down payment. You could even sign over the bill of sale, and then you now get access to the tax deduction. So this is what the rates look like in 2017 for depreciation. So the first year was 11,000. You can see it drops dramatically and cuts in half, whereas now the current year you can take 10,000 the first year, 16,000 the second year, and 9,600 the third year. And so if you understand this, this is the reason why Amazon doesn't pay taxes, and they've claimed losses every year for the last 20 years. So they last year made $11.2 billion, and the reason why they didn't pay taxes is because they bought tons of vehicles and they replaced UPS. So they were able to take what's called bonus depreciation. And so you have the same access as soon as you become a business owner. You know, there's no difference between you and Amazon or Google or Apple. You just don't know the deductions. So now you can hire your kids as well. So this is a huge deal. Kids are expensive. They have smartphones, dance, college, video games, weddings, all that good stuff. You hire them and they pay for their stuff. So you can hire them to do anything that you would pay someone else to do. They could clean up. They could go with you to events. They could be personal assistants. I have a daughter that does tax preparation for me. I have a son that goes with me to almost every single event and is learning as he's making money. And you can pay them $12,000 a year. They don't have to pay taxes on it. You don't have to pay taxes on it. So it's a tax deduction for you as a business expense, and then they don't have to pay taxes on the first $12,000. And the reason why is because of the standard deduction. Everybody in this country is entitled to standard deduction. There's no unemployment taxes, there's no FICA, no federal, and no state taxes if they're under the age of 18. And if they're over 18, you just withhold FICA. And we can help you handle all this as well if you need that. Now, the last thing I want to share with you as far as the deduction goes is social giving. And I truly believe that by combining your passion and your profits, it'll change everything for you. And if you help enough people get exactly what they want, you'll automatically get what you want. And my mission in life is to teach more, how to save more so they can have more, live more, and give more. And then I can then nourish more and free more. And these are the 3 nonprofits that we work with. And so we started this process, this social business 2 years ago. And when I started it, I needed to be able to write this stuff off as a tax deduction. I couldn't hope that I would get a contribution for charitable deductions. And so if you combine your passion and your profits, meaning that you connect your gross income number with your giving. And so whatever you want to give to, whatever you're passionate about giving to, but I'll just share with you how it worked with me. So like Tom's Shoes, Warby Parker, those are social businesses. And so for every dollar that we bring into our accounting practice. We provide a serving of whole food plant-based nutrition to children in need. And since we started that process in April of 2018, we've been able to provide over 2.8 million servings now. This was as of September, and we're feeding today almost 9,000 children a day whole food plant-based nutrition. So that's changed everything for me, and it's allowed us to skyrocket our business. Now, the next step as you start making money, a couple things you need to do. You need an LLC. The minute you start making $1,000 a month in your company, you need to get an LLC. That limits your liability, okay? But what's very important about that LLC is it allows you to either treat your business as a sole proprietorship, which is just on your personal tax return. So a partnership, an LLC, and a sole proprietorship are all taxed exactly the same way. Okay, so, but here's what happens. The clock starts ticking the day you have the LLC. And so the LLC can then be treated as an S corporation for tax purposes. And the reason why you would want an S corporation is, one, you're 10 times less likely to be audited by having an S corp. And two, you can then treat this S corp and not have to pay self-employment taxes on 80% of the income that you make. So that's a huge deal. So as a business owner, let's say you cleared net income after expenses was $60,000. If you're a sole proprietorship, a partnership, or an LLC, you're going to be taxed the same way. You're going to have to pay self-employment taxes of 15.3% of every dollar you make, which is $9,180. Now, if you have an LLC that is then treated as an S corporation, you can actually bypass 80% of that. So you're only paying $1,800. So I ask people all the time, would you rather pay $1,800 or $9,000? That's just the difference. Now, people ask me all the time, when do I need an S corporation? When you start making $1,000 a month in net income, meaning after expenses, you need an S corporation. So if your accountant has told you it is not beneficial for you to have an S corporation over $100,000 a year, that's probably because they are not situated and set up properly to process payroll for you and to make sure that you've done everything that you need to do. I've had so many clients overpaying taxes year after year because they are not doing this. And if you do have an LLC and you did not treat it as an S corporation, we can actually go back and amend back to 2017, part of the year of 2017, and get you back the money that you ever paid in taxes. So in summary, guys, I want you to understand there's never been a better time to have a home-based business. And, my big purpose is just to help people understand that the smartest thing that you can possibly do is have a home-based business. And I do like to tell people you got to follow the money. So the reason why most Americans believe that network marketing is not legitimate is because it's the only thing that people can do on a part-time basis to create full-time income and be able to walk away from their W-2 job. And as I said earlier, the average family saves $4,000 to $8,000 a year in taxes. Well, here's the issue. There's 128 million households in America. If you times that by just $4,000, that's $508 billion that the IRS would lose if everyone had a home-based business. So just follow the money. But it's never been a better time for you to get in a network marketing business and stay in a network marketing business and do the things that you need to do in order to be successful, because the guarantee is tax savings. If you go to an event, you're going to get the personal growth and development that you need in order to grow your business. You're going to get the belief that you need in the company and the products and the people that are in the company. And just like what Ray and Jessica are doing here, like, it's amazing. And you will come out of this event and you'll go do more things. And it's a tax deduction for you. So take advantage of the deductions that you're entitled to take. One of the biggest things is hiring your family, so hiring your spouse and your kids for additional tax savings for you. And hire an accountant. Do not do your own taxes. I am dealing with 5 or 6 clients right now that did TurboTax and are being audited for for boxes being checked incorrectly. And now they're being audited for 3 years. Don't do that. Hire someone that knows what they're doing, and hire someone that understands the accounting industry so that you're saving as much as humanly possible. And one of the things I want to implore upon you is that if your accountant argues with you over certain deductions that you're entitled to take, find another accountant, because they're not going to help you in the middle of an audit. Tracking expenses is crucial. You want to make sure that you're tracking your expenses in some sort of accounting software, not just an Excel spreadsheet. and not just writing down, like, I think these are my deductions for the year. And I want you to go out and share this with everyone so you can make a massive impact. See, one of the things that I want you to understand, at the end of the day, if someone tells you no, that's fine, but they don't know this information, and it's imperative that they understand that they're going further and further in debt, and we need to wake people up, and we need to allow them to understand the massive tax benefits. So if you want to reach out to us, that's great. Here's our book. We are a full service accounting firm. We can help you with all this stuff. I know I threw a whole lot on you, but one of the things, there's two things on this page that I want you to pay attention to. One is a $99 tax strategy session. So there's a link. You can book it. We're going to have a 30-minute conversation with you, tell you what we could have done in the past, what we could do to fix the problem, your structure, make sure that's set up properly, give you deductions that you should have been taking, and just tell you, what we would charge, but then also you can take it to anybody you want. So it's just a second look, and we're going to review your tax return and say this is what you should have done and this is what you need to do in the future. And the second thing is, if you want to text that number to the bottom, I will send you, it's going to send you a link to the tax strategy session. It's going to send you a deduction spreadsheet so that you can actually take advantage of, whether you use us or not, the deductions that we give people every single year and say, hey, these are the things that you can write off by having a home-based business. And it's also going to give you a copy to buy my book. So if you want to do that, that'd be great. And guys, and here's the second book that we just came out with. It's a friend of Ray's and mine, Robert McFadden, wrote this book with me. But, it's not about how much money you make. It's about how much money you keep. And it matters that you do everything legally, morally, and ethically that you can to combat your taxes, or you're literally giving away your business and your legacy. So that's all I got today, and I hope you guys have an amazing time at Rankmakers, and everything that Ray and Jessica are doing, you guys should be a part of. It is a massive tax deduction, so take advantage of it.